Welcome to Volatility 411 for Equity Armor Investments. I am Joe Tigay here in the VIX rate where all of the action is. Ever since the tariffs were put on last Thursday in a surprise way, the market has completely unwound itself and the market is in a completely new direction. We're in a bearish direction. People are putting their money into bonds and precious metals out of equities. And as a trader, we need to be aware of that. This is a new trend and it's not going to change until something significant happens. Now, Monday, we got a huge down day. Yesterday, we were up in a big way, not nearly as much as the Monday down day. And today, it's looking like yesterday's buying day could have been a dead cat bounce. Is that the truth? Well, we'll know if we make a new fresh low. So, of course, we're watching out for that. Now, behind me, of course, we had the VIX was on the high of the day, 24.5. We're currently at 23. The market's off of its lows, currently down about 30 points in the S&P 500. It was down 50 points in the S&P 500, so we're seeing some big moves. If we get a complete reversal, that'll be a good sign for the market. Of course, we get up closer to unch on high volume. I love those days, the reversal day. That's a sign of all clear. If we don't do that, if we stay down 30, I think this market is still in for, we're still looking for that catalyst, that change to get us out of this short-term bearish trend. Now, around the world, we're seeing central banks ease their currency. Of course, China, we all know about. It's happening around the world, everywhere except for the U.S. Now, is the U.S. going to be the next person to follow suit? A surprise rate cut, is that in the cards? The bonds bettors certainly think they are, so that's something we're watching out for, being on our toes as VIX traders, as we always are. Now, the last thing I want to talk about, to be on your toes, something to watch out for the periphery. Yes, we have this global slowdown due to this trade war. One casualty is the oil market. Oil dripping down right around to $52 a barrel right now. Now, if that gets below that 45 area, that 40 range, that's where we can kind of see some contagion, where this slips out of control. That's the area where a lot of U.S. producers have borrowed against what they own, and if they can't sell it above 45, 42, they have a hard time paying back that debt, and that's where we see this slipping out, and that's where you can see this global slowdown become a credit crisis, and that's when we really see the VIX soar. So VIX traders have to be aware of the price of oil for the next few weeks until this gets behind us.